Welcome to another edition of Arrow Insights. I'm Ryan Synnot, Associate Director here at Arrow Private Wealth. Joining me today is Peter Leggett, Executive Chairman and Chief Investment Officer. Today we're diving into a very interesting topic, the bank of mum and dad, something that's become more and more prevalent over the last couple of decades. So Peter, let's get straight into it. Talk to me about what the bank of mum and dad is and why it's become more popular over the last few years.
Ryan, thanks for the opportunity to come and share. And essentially, the bank of mum and dad, as it's now commonly referred to, is where parents are stepping in and assisting their own children, either through gifting some money, maybe lending some money to help them get into buying a property, helping them with their deposit on a home, helping them get into deposit a little bit earlier as well. What we've seen over the last decade or so, this has increased dramatically. So,
did you want to put some numbers to that and show how it's changed over time?
Yeah, it was interesting, Ryan, when I did some homework in preparation for this as well. I looked up, and the Productivity Commission said that from compared to 20 years ago, it is double the amount of the number of mums and dads that are now helping. And as we see up on the screen at the moment there, the parental contribution has been substantial, up to nearly a third of contributions going to house deposits. And as we see, there's been some stats there that come out recently that said if the Bank of Mum and Dad was an actual bank here in Australia, they would be rated somewhere between the 5th and the 9th largest bank in Australia. And you can see on the chart here as well that the Bank of Mum and Dad in billions is actually worth $35 billion, the equivalent of in last year's term. So that's substantial.
Thanks, Peter. For parents, it's obviously quite a substantial decision to decide whether to, if they're going to support their children or not. From the parents' perspective, what do you see as some of the major benefits of choosing to support their children potentially earlier in life than maybe they would have thought of previously?
So other than helping them to get into the market earlier, and also just to assist in that deposit or reducing down some of the mortgage insurances, in many ways what it is doing is framing some sense of security for their own children. We've got this Australian dream of owning our own home. And what we've seen is over the past 30 years in Australia is that wealth has, substantial wealth has been created. And so rather than waiting until people retire or they pass away, they've got the ability of helping their own children and or in some cases now grandchildren to move into this property area as well. And that's an important part. There are financial benefits of that as well. To the children, but also to the parents. And in my own, I can give an example in my own situation where my wife and I have helped two of our own children thus far, and we've got a commitment to our other children to help them. So exactly what we're talking about here, the Bank of Mum and Dad has given us as parents some sense of certainty or better security that they can afford to live in a better suburb or maybe not on the outside suburbs and having to be transported long distances to get to work or where the infrastructure isn't quite the same. So there are a number of benefits here, both to the parents and certainly to the children.
And one of the things I often see you talk about is, living legacy and being able to, see your legacy for yourself, whereas, some other people may not make that decision. And unfortunately, they go on and die and may not necessarily be able to enjoy seeing that support for their family. Now, as part of the business, we do have a lot of clients asking whether they are in a position to do this for their family or not. For you, what are some of the challenges that are presented to mum and dads to become that bank of mum and dad?
It's a conversation we're having increasingly, isn't it, around this bank of mum and dad. One of the real considerations first of all is to make sure that mum and dad are not going to put a strain on their own financial resources, their own potential retirement or whatever. So making sure that they can afford to what's in their heart and mind for their own children. And we see on the screen at the moment there as well some of those risks and challenges. And I mentioned that first one there as well. So often we're seeing there's a lack of clear repayment agreement. There's no agreements in place Is it a gift? Is it a loan? When is it supposed to be repaid? And we've seen quite often where there's family tensions that are created where one child has received some money and another one or two have not, etc. So where is this documented? Is it discussed openly amongst the family? And we've got to understand around today family law, separation, divorce. You lend or give some money to one of the children for a house deposit without proper agreements. This can get caught up in family law, and your loan or your gift can disappear out to through family law. And the other part of that is, can I give you an example? One we recently had where mum and dad wanted to help their daughter, so they lent her. They were talking about $50,000 or $60,000 in that part as well. What came back in the second conversation was, our son said, "What are you going to do for us?" And all of a sudden there was tension that was being created inside the family. So from the parents who were trying to bless their children, it actually caused some tension that's yet to be resolved. What's the key point out of that? Or the challenge? Make sure you're having open and honest conversation inside your family for the right reasons.
One of the benefits of this is obviously reducing the amount outstanding on a loan for your children. But over the long term, that can have quite substantial benefits financially. Do you want to sort of give us a perspective of how that could potentially look?
Yeah, it was part of the reason, Ryan, that my wife and I were wanting to help our own children in this situation, as I've said. And in many ways, we've got some numbers up on the screen at the moment on a $900,000 loan. And if they were able to assist with just $100,000 extra, say in the deposit, over the life of a 30-year time frame, the interest saving here is over $125,000, $127,000. That's massive. And so for my wife and I, this conversation around, and you talk about living legacy, while we're here, let's help our children rather than wait until we pass away, which by that stage they may not be in a position where they really need that help. But to be able to assist them early and save them, quite a substantial amount of interest over that journey, that's a pretty positive benefit.
For parents looking to undertake this process, what are sort of your top 3 tips for the Bank of Mum and Dad?
Yeah, and pretty simple, and you'll see that up on the screen now, folks. One, and I've alluded to it before, just make sure that your own financial affairs and your own financial security are secure. As I mentioned before, we've created a substantial amount of wealth in Australia over the last 30 years, and that's enabled this to increasingly happen. So the Bank of Mum and Dad was not a conversation 30 years ago. It certainly is today. I've mentioned it along the way before, is just making sure you document things appropriately, get it in agreement and in writing, and make sure your own children, all the children, understand what the reason, what you're doing and why you're doing that. And the last part is just seek professional advice, because there are legal implications to all of this as well. Just getting all those parts right. So that'd be a couple of the tips that I'd be saying. But as I summarise back to you, Ryan, this is an increasing conversation, both for parents and also for grandparents, and we're seeing this more and more.
Thanks for those insights, Peter. If you're considering becoming part of the Bank of Mum and Dad movement, please feel free to get in touch with your advisor, or if you're not currently a client of Arrow Private Wealth, please feel free to contact us via the website.